Welcome back to the channel. Today's video is vastly important for anyone looking to position themselves for the next major bull run. Now, this is not hopium. This is not me being completely bullish, but I do like to buy around the lows and sell around the tops, something that we've done on this channel all year long. We've been looking at the major stock markets, the US, real estate, these sort of things that have been coming towards a bottom and obviously showing some stable signs, especially in real estate when the data is out there. And the media is really getting on board here to try and chop and churn the news around to fool people out of position. So I'm going to go through a massive macro update looking at what we have been covering over the last 11 months, basically from early this year around January, February, when I put those videos out for the public on the channel. If you've been around since then, let me know in the comments section by giving me a nice little love heart down there, or if you choose to use a stake. Love hearts and stakes, smash us up down in the comments section. Obviously, it helps the channel out as well by hitting that subscribe button, bell notification icon, and of course, like the content up. This is something we've been covering and following up here all year long. Now, I also just want to mention the links in the top of the video description. Here's the shill section. We have our alpha report coming out today. So make sure you are subscribed on the alpha report there. This is the TIA crypto. We used to call it a newsletter. Essentially, we're looking at Bitcoin, cryptos, basically things in the DeFi space and real estate cycles. So this is how we're playing the market from a macro point of view. Link is in the top of the video description, and you've also got the other shill links here. These are for the exchanges that you can trade on. Of course, if you're uncomfortable, don't worry. Just go down in the comments section, get your keyboard out, and just talk about shilling and all that sort of stuff down there. It helps out the algorithm anyway. But there is $30,000 on Bybit. Of course, you have to deposit a ton of money and trade on that exchange to get the $30,000. That is true. But Bybit and BitGet, they've also got massive promos going on because FTX has obviously collapsed. So they're trying to bring on board more of the traders who are out there on different exchanges right now. If you have problems with it, don't use them. Go into the comment section and get your feelers on with your keyboard. So that's the main things here in the comment section. And the other main thing I use is the scan swing indicator in today's video. I use that in all of my trading. So quickly, the first big news here is Russia, Ukraine, live explosions. Explosions killed 2 in Poland. So there's a whole lot of drama going on where they're trying to get NATO involved now because Poland is part of NATO. And if there is an attack on it, then the whole group of NATO members, the NATO member states here, should come together and then start a war with the country who attacked them. But US Congresswoman is calling for calm. So this is just 53 minutes ago as I'm recording here. Basically, those calling for NATO to invoke Article 5 after the attack in Poland do not understand NATO and should not be taken seriously. So there's a lot of calls for that at the moment. People trying to instill fear about this particular war. And I'm going to show you that in the charts in just a second as well, what happened last time. Russia is losing the war. And unless this was a deliberate attack, calm is required. So at least they are moving towards peace rather than war. That's a good thing. We don't often see that from governments. You know, we've seen the history there. And in case you were wondering where everything is here, obviously Russia over this side here, Moscow, that's the border. You got Ukraine, Crimea, and then Poland over here. So it's hit in the east of Poland. So looking at what happened last time when we had the news about the Russia-Ukraine invasion, that was the war. That's this big arrow right here. We had this big bounce. That's the 24th of February. Remember that date there, 24th. We had the bounce on the S&P, and oil was a big one at that point. We had this bounce here and it hit new highs. And then the following 1, 2, 3, 4, 5, 6, 7 days, it peaked out. And we have not been past that top since the extreme news of the war. You had the following day, which was slightly lower, and then the market tanked from that point. This is something that we were putting out to our members exactly at that time. Michael and I, with our members, our TIA members over there, looking at the fact that the news is always the most extreme at the extreme peaks, usually in the opposite direction. And you're seeing that now with a lot of the doomsdayers calling for much, much lower prices. So we're trying to decipher what's going on here in the news and the media, which is why I've been talking about a bottom for several months, and the price has been the same. People are saying things need to go further. We've got the FTX collapse and just pile in every other piece of macro news, which has never happened before. and things are different now, pile it all in together, it is exactly the same that's happened last time. It's surprising how similar these events can continue to unfold in terms of the market structure and where the price is going, and people just forgetting that things basically repeat in time and price patterns. So oil tried to continue up from that point, another lower swing top, which is very, very weak. And of course, from that point, it has collapsed. So where we see ourselves now in oil, this is the day. This is the missiles. So maybe it's not priced in yet because the markets are closed, and we'll have to wait and see what is happening over the next 24 hours. But there's really not that much change here for the oil price and what happened last time. So we've seen these sorts of events before, meaning big, extreme news announcements based on war, and we had much bigger moves at that time. So this is where oil currently sits now at around 87 US per barrel. Now, with the US dollar, we had still collapsed further today. This is the daily chart. We went even further than what we have seen over the last 4 days or so. Basically, everything that's come in from this week and the end of last week. So we've now hit a new recent low of 105.34. What happened last time? We have the war announcements here. We go back to February of 2022. Let's have a look here. So February 24th. You can see here, that's the 24th bar here. We hit a new high and the market pulled away from that point, consolidated, and then continued to go into the current peak. That was many, many months there. And that kind of came off the back of a lot of things going on with inflation and events going on in Europe as well. But now we've seen one of the biggest declines on the US dollar since all the way back in 2021. So although I'm still of the view that this is probably the market rolling over, I've talked about it many, many times before that this is probably going to take months. It's the US dollar after all. This is a global market that everyone gets involved in. This is not Bitcoin. It's not cryptocurrency. It's not just going to fall out of the sky like FTX does when things go wrong, of course, big things. But this can take a lot of time. And so far, we've seen it happen reasonably quickly just for this little move from 109 to 105. But eventually we have to come find some support and go for a little bit of a reversal. And this might be some of that news where we've seen in the past when you get things around war, we get a little bit of a flight to safety in the US dollar and a bit of a bounce. Because what we've seen at the coming up to the close, about an hour and a half here, 105, and the market is trying to close higher than the last previous 2 sessions. So that's your candle right here. The closing price currently is 106.56, and it's just getting above these last 2 days. So that's usually a sign short term. We're marrying in things short term and long term so that we don't get confused. The short term, maybe we'll see a little bit of a correction here. And should we see a correction on the US dollar, let's look at what we currently have. Anywhere up to 10-ish is still just a short-term bear market rally. So this is the bear market confirmed for the US dollar on the daily chart here, not the monthly, but the daily. And so maybe we see the market bounce up anywhere between where we are here, 105 to 110. All right, you can see the previous support levels, and that's broken down from that point. So anything from that point, yes, people are going to be running back to it saying, oh, it's all back on, US dollars moving up. You get the same sort of news cycling through the market again, and basically sort of trying to get that fear into the market. And so far, the S&P is not having a bar of it. Today's movement, the range of the bar is not much at all. And we're still above our 50% level of 3,900 points, which is a pretty strong area here at the moment for support. We need to see it continue to remain strong and hold up. Anything probably, I'd say, below 35-ish, 136 is not a good sign. But we can have reversals and corrections down to these zones. But ideally from this point, we really don't want to see it come much further than about 38. So for the short term, 38 moving back down is just little touches in the market, and then some strong moves out into December. Now, in yesterday's video, this one right here, how the crypto collapse is resetting Bitcoin and history repeating, I talked about the market potentially going down in December. This tends to happen after the Christmas rally, and the Christmas rally doesn't always end at Christmas at the 25th. Sometimes it ends a little earlier, around that 17th to 21st of December. But either way, even if we get the move up into December and then the reversal, that's not to say that the market will go down lower than this. I often think that I don't have to explain that, but you know, some people are very new to the market, and these sort of things need to be explained a little bit further. So even if we get that move up, any sort of correction we see isn't so much of an issue unless it breaks the previous macro low, which is October, which is what we've been looking at. And I want to get to those macro things in just a moment. But essentially, things are still on track for the bottoming process, something that we looked at back in June. And we said, even if the market goes a little bit lower, this is all on the videos, all on the channel. As I said earlier in the video, let me know in the comment section if you were around for that and you understood it and you can see it playing out in real time, which now makes your investing and trading a whole lot easier because you're starting to become familiar with how these market patterns work. It's what we're saying in June for that potential next low. Hit me down with the old love heart and the stake emojis. This is still within that zone. We've got the trading zone that is forming between 35 and about 42. Sure, this peak's at 43, but it's just a nice little round number there. We want to see it hit about 4,200 points. Okay, so the zone is still in play for the last 5 months while the market has been extremely bearish and fears of more decline, huge numbers being thrown out there. It's almost an exact repeat as what happened at the peaks. When we go to the peaks, things are just going to keep going up and up and up. And while the market's really just not going anywhere, basically from, you could say, that September peak, if you wanted to call it the November, October peaks, it didn't really go anywhere from that point, but people are still calling for much, much, much higher prices. And then you get the collapse out of bed, which is kind of what might be happening right now. We get this move up, we get that collapse. Maybe it's a higher low, which is what I'm hoping for somewhere into that first quarter of 2023 now. And then we start to move higher again and everyone sort of misses out again on that second opportunity. So in a macro sense, here I think will be another opportunity. But so far, S&P, it's basically dead on the timing and the price. We've got the macro 50% level here. That's a huge level. I've been watching at 3,500 points. And the next yellow line here was the peak prior to the pandemic, which is also a very key significant level. The market hasn't reached that, which is a good thing, but even then it's still above the macro sense. And I'd bring it back anywhere to this low here at 3,200 points. So far the low's in at 35. Anything down to that 32 is still pretty safe. And like I've looked at a while ago, 27, but I'm not looking at that for this point. This yellow rectangle is a really good price area for price to come back for any sort of support levels should we break down further than this October low. But for now, it's not looking likely as we continue to head up towards this target. Let's see where that next low forms. Hopefully it's a higher low in quarter one of 2023. So that's the S&P, the US dollar, oil based on the war stuff that we've just been looking at. We've got Bitcoin and cryptos to cover, but I want to go through this important major macro update. This is something that we've been following the entire year. I want to try and squash all of the fears, the uncertainty, the doubt, the confusion in the market. This has all been on the channel for anywhere up to about the last 11 or so months. Call it 10, 11 months, going back to 2022. So the plan, it's to identify the lows using time and price. So time is the most important, and then we need to manage our risk. This is not about buying the exact low. It can be buying other significant lows that form in the market. It's going to be based on your own risk assessment, meaning how much do you buy at different areas in the market. Bitcoin was at 30K. Did you go all in at 30, not expecting lower prices? Or did you put maybe 5% of your portfolio in at 30, potentially with lower prices, and you got more in the bag? That's the sort of thing that we look at when we talk about managing risk on the channel and, of course, in more detail with our members. So the macro, stock market's probably bottoming. Talked about that for October and, of course, June as well. Bitcoin probably bottoming. Talked about that since that low came in June. Again, it all goes back on the channel as well. Macro, Bitcoin 4-year cycle on track. That was the video I posted on the channel back in February, and I tend to do updates every month or two about that 4-year cycle. So stay tuned, subscribe, and like the content up. And, I always say drop those comments down below as well. Macro, Bitcoin probably bottoming at $11,000 to $19,000 area. That is this chart here that I posted on the channel a long time ago, looking at these particular zones where the market bottoms. So you don't need to go all in at $19,000 when as soon as we touch that level, 19.5, but start to position your dollar cost averaging into Bitcoin if you want a DCA for Bitcoin. Remember, they're separate Bitcoin and cryptos, I still think cryptos are going to go lower. Even if Bitcoin does go lower, it's still within this zone here. So don't go all out. If you need to sell the house, sell the car, sell the wife, I'll leave that up to you. That's part of your own risk management, and then move forward from that point in time. I do like that 13,880, which I've been calling 14,000 on Bitcoin, because it was the monthly closing price of the prior all-time high in 2017. Really nice number there. It peaked out exactly at that close in the June rally of 2019. So another significant price resistance level. And then the market came up to that point, closed just under it before it broke out into new all-time highs. That was in October 2020. So it has been a key level for Bitcoin, 13,880, call it 14K for a nice round number. It wouldn't be a surprise should we come down to that and spike past it and then come back above. But we're not there yet. So position yourself accordingly. Maybe we get there, maybe we don't, which is why I talk about pyramiding. Buy more in the bottom, buy medium amounts here, and buy less at the top. That's all that is about. And I'm only using that for Bitcoin, just to make that very, very clear for the 100th time. So that's for Bitcoin. Macros here. Macro USD probably topping. I talked about it in September as the big news came out and started to put a real solid top on that market and fell. Yes, it can take many, many months. Maybe it can go a little bit higher to some of the other resistance levels. But if the movements are overlapping, if there's a lot of price overlap in these moves, so you can see the market's down, and what that would then look like is a move up again and a move back into this price range. That is a weak pattern, because you're getting a lot of overlap in price compared to what we saw previously when the US dollar goes up and there's only a small retreat into the previous price, and then it pushes away again. Small retreat, and now we're seeing a big retreat into the previous price zone. This is a weak pattern. It's known across all markets as well. So that's what we're getting into with BTC. Cryptos probably have a little further to fall. Looked at that on these macro views here on the chart. To the downside, we're probably sitting at about 85% down for all of the cryptocurrencies, excluding Bitcoin and ETH, and excluding stablecoins. So that's about 150 billions worth. That's down to about 150 billion total now for all the altcoins. Could go a little bit further. Right now, we need to wait and see whether it can close back above around 320 odd billion in the market cap. But yeah, I still see this going a little bit further. You've got a pretty big zone here that I think it needs to clear out before we can really reset. So that's for cryptos. Crypto and Bitcoin accumulation will probably take months. I mean, this has been on the channel again. That's going back to this chart. You've got around 5 months under this low. Another little peak in here with that actual black swan event. Nothing that's happened this year has really been a black swan event. I know it's going to trigger some people as well, but you can't have a black swan event every month. Come on, guys. Going back to 2015, you had about 9 months in this zone as well, with an extra month of a little touch here in October of 2014. So everything is as per usual. Nothing has changed. Yes, maybe some of the titles of my videos change, but this has been the macro play, and I'll continue to come back to this so that it can be nice and clear for the macro picture overall as we move into this next stage of what I believe will be a major bull market for land prices, and probably the stock market, not tech. Tech and stock are different. So when you start hearing about tech and the fallout and losses of jobs, different sectors. Tech has to have that pullback. It was a significant bubble. That's the US tech stocks. That is not going to affect the real estate cycle, and it's not really going to affect the stock market either. This is the S&P, of course, because it's made up of different stocks, not tech stocks. Okay, that's going to affect the Nasdaq. So the macro here, I'm talking about monthly. This is monthly charts. So real estate remains relatively stable when you look at it overall over the course of, say, individual countries: Australia, US, UK, Canada, that sort of thing. This is still on track for that next run up into 2026. A lot of the fundamentals are getting worked out now, but we're seeing it in the chart. When I talk about fundamentals, looking at things around the news where banks and governments are creating new, interesting ways that they can make property more affordable for people. What we're even seeing in Australia is that you can put down 5% deposit and the government will guarantee the other 15%. You still have to make repayments on that 15%. Normally you need a 20% deposit on real estate. But the government now says you don't have to put that down. Therefore, it's easier for people to get into property because they need less money. This is just one example of how it's going to continue to unfold into this peak of 2026. So when you hear the doomsdays and all that sort of stuff on YouTube talking about much, much lower prices and things are about to collapse and get a whole lot worse, and wait 12 months, 24 months, it's going to take another couple of years until we get out of this. I am very, very sure they're going to miss any sorts of bottoms as we begin to see the bottoming processes formulate on these markets. And remember, when we're trying to get in, we are not trying to pick that bottom. We're just trying to identify a range that we are comfortable with on our risk management to begin building our positions and then get out around the tops, the same sort of thing, just where we are comfortable getting out. That's all it is. And then you end up taking a chunk of profits out of the middle. Maybe it's through that section. Maybe it is through that section. It's going to depend on your own plan. It's not about picking the bottom or picking the exact top. Just want to take profits because this is a full-time business. If it's a full-time business for you, that's what you need to do moving forward. All right, guys, I hope that has cleared up a ton out there. Thank you for sticking with me for that major macro update. I'll come back to this in future videos and see how we are tracking. But so far, everything seems to be reasonably on track with what I'm seeing in the market. Let me know what you're seeing in the market in the comment section. You know, I'm getting back to a whole lot of these comments and just replying to you guys down there as well. It's been a pretty good time in this bear market. Make sure you like, subscribe, bell notification icon. Videos are popping up here on your left-hand side. And don't forget all my shill links down in the video description here. $30,000 now, not 13, but $30,000 on Bybit. And the newsletter is coming out in less than 24 hours. Thanks once again. Have a fantastic day. Peace out.